Yeah, talk from your point of view.
When my customers,
let us be practical. What you would do, so like 6
yeah, when my customers tell me what they need, and I normally give them a pro forma invoice stating how much the items they are ordering is going to cost them, including shipping and everything. Then I give it to them, they make the payment, and then I ship the things to them.
She's saying, because you said that when you send the pro forma, they're going to pay you and you send the goods. Now she's saying, when she sends out her pro forma, it lets the client make up her mind whether the fee she's charging is acceptable to them, and then they can continue with the transaction. Okay, that's why I want us to cite example, what we are doing. Let us not go outside what we are doing. Okay, that's why we are in this room.
Madam,
yes, sir.
I want to find out something. Assuming that okay, let me take from my own point of view. There are some things that for me when I buy them, they are very, very small things that like you don't really get receipt or invoice or nothing for them. Let me talk like you are running a business and want to buy like credit, mobile phone credit. If the thing is very, very small, you may not be able to keep, you forget to keep this thing over there. And at times, like this small expenditure, like buying of such a water and all those things, or you're going out to do a business transaction. So at the end, looking at the invoices, receipt, and then proof format, how do you create room for that this aspect?
Again, I will cite the example. I said here is a place where when they are even giving tea or coffee to the call-ins, those who come in for business inquiries, they still record it. You come to my office in London, by the time we give you the parking ticket, you already incurred a debt with us. Hello? Hi. And we know how to work that in. Which means we make appointment with people we know are going to be real shows. Hello? Now he's mentioning units, this telephone bills. The fact that you haven't got a line and you're using mobile doesn't mean you shouldn't keep. When you scratch, you keep. I have a little purse. Anytime I scratch, it goes into that purse. And periodically, I know how much I've scratched in total, how much I'm spending. Not the one we used to sit with our girlfriends. So I'm talking about business. Because that helps you to know how much, because when you're doing the overheads, you know the average you are spending on telephone. And then it gives you, it's also when you want to now move into the former one, getting the line one and all that, you can compare. Okay? So when you even say pure water, I'm still having a problem with it. Because anytime you are spending money, you see, the business is not yours. When this gentleman told me that he's winding up because he's tired and what have you, he's 75 years, he's built his children out of the nest. I said to him, but the business is not yours. You have workers in it, the business belongs to Ghana. You can't wind it up. And I managed to convince this man, and I said, just sell 10% of your shares, and now the business is alive. And the moment that the employees know that they are shareholders, come and see how they are working. Hello? So please, anytime you spend even half a penny, peswa, record it. It may sound lousy, but do so. It will help you. Daily cash book for keeping records of monies that come into the business, monies that go out of the business. Very soon you're going to look at templates and how you can enter some into which paper. Customer record book, orders they bring in, time they bring in, the day they want it, price check, we talked about that already. Creditors record book, stock taking and stock record book. All that, you're going to look at some examples later on this afternoon. Time record book, sometimes say I'm a new business. But when I started, I was clocking in my own time. Okay? I was clocking in the time that as an entrepreneur, I am spending and how much I'm going to pay myself. If I did 6 hours, I know how much times what rate at the time. And that habit helped me when I got more staff, how to manage them. So you don't say to yourself, because I'm an entrepreneur, I just come into the office. Some of us, we stay overnight. We never clock the time. We never record our time. The real time we spent on the business, we don't. So when you now come with your flash card, you're going, somebody's going to ask that this person. They don't know when you were doing a sleepless night. Record every hour you spent on that job, that business. You owe it yourself. Asset record keeping. For keeping record of all your equipment you have, it helps you. Do what? It helps you to depreciate. There's so many reasons why you want to know that. Okay? So that even when new brands have been made, you know what you have. Reflecting on records, we're assembling records in hand. You are able to communicate performance, satisfy the requirement of important stakeholders, i.e. the investors and the banks. You're also able to look and find answers to questions like, which points in the month was what I produced too much or too little for market and why? Can I use the repeated patterns of the past periods to better predict this next period? Again, you keep statistics, customer behavior. This time of the year, some people are so good at that, you know, because they write things down. Between January and March, because of this season in Ghana, people, during the Harmattan, people know what to sell during the Harmattan. You go to the supermarket owners, you ask them. He said, this time the weather is so dry, people drink a lot. So I put so much beverages in my shop. They are good. They are making some observation. Were there any goods that became unsaleable? Again, you go to some places and these goods have been sitting there collecting dust for God knows how long. Almost so they will reduce the price and get rid of it. And they've got what? They've expired. The government workers are tired, so they can't be bothered. There are 3 main record assemblies that you need to do. The amount of cash that has passed through your business in buying, borrowing, and selling during the period, and how much you have left. The amount of profit or losses you have made in that period, the value of your business as at right now. The difference between cash and profit. Can somebody tell me the difference? How do you work the difference between cash and profit?
I was saying that revenue is all the money that you get for the work that you've done, but your profit is what you have left after you've made your expenses.
After you've deducted all you put into getting there. So your margins, if you don't know your margins, so I've put something down for you. Your business may have a lot of cash, making it appear successful, yet still not have moved forward profit-wise. How? You may be owing money and have pay later arrangements. The creditor or supplier might have come to you and said, oh, these goods, these iron rods, you keep them, use them to build your houses, and then when you have sold them, I'll be collecting this. So you have some arrangement. As far as they're concerned, they put all their profit on top. So if it's 2 years, they know that they're still going to make out of the interest they are charging you. And then when you see all this money sitting down, you forget that a good percentage of it belongs to your supplier. And you start chopping the money. Hello?
Hi.
Even if you have money left over after paying all the bills, staff and people you owe and their interest, the money may still not represent the progress it appears. Why? Even when, I'm posing this question to you, okay? Even when you have paid the bills, the staff, the people you owe, and their interest, the money may still not represent the progress it appears. Can somebody help me here? Why? Yes, sir.
Yeah. I'm into publishing. I write and publish books.
Yes.
And I had an angel investor. So he gave me the money without taking any interest. The time she gave me to send back the money, I was not able to do that. So in the 3rd month, she resorted to taking interest on the monies that I had collected from her. Now, my book business is seasonal. It starts in September. As I sit here, we are in the peak of the season. So she keeps on calling that she needs her money. And I quickly have to do quick calculation. She is now collecting the interest instead of the principal. And it is a drain on my profit.
Thank you, sir. That's a very good example. Okay, depending on which industry you are in, sometimes Too much cash in your drawer doesn't mean that it belongs to you. Hello? Because the cost, if it's the fast-moving consumer goods or the farmers, when they give you, you know that there's a season where there's no plantain. An act of God will determine how much you are buying your goods for. So you will know that this period, your profit margin is going to what? Reduce. And that's going to affect your operations. Going to affect your cash flow operations or activities. And so therefore, you should be able to know that a lot of cash in front of you does not necessarily belong to you. How much do you value your business? The records of assets. How much do you value? I met somebody who is giving out sanding machines, and he just went overseas to China and bought the cheapest tools. And he's giving it to people to use. And every time 2 or 3 people have used it, it breaks down. So he was complaining to me, and I said, let's look at the quality of goods you are importing. And I looked at it and I said, but when you throw nuts, you get monkeys. Hello? Or banana. When you throw banana or monkey, I like banana a lot, so I call myself God's monkey. When you throw banana, you get monkeys. Okay? So you know what you're investing, what you're expecting out of it. So sometimes you look at your assets. I was speaking to some women the other day. I said to them, when you open your wardrobe and you see all the clothing you got there, imagine if we've died right now. How much would that benefit your husband or your sons? But these are your assets. Hello? Is that a good example enough? The ladies are saying no. The gentlemen are saying it's a good one. It's a good one. All right, so that's by the way. So an inventory of fixed assets should be recorded and kept on file. The record should show date of purchase. Why does the record we keep show the date of purchase? Can I get some help from the back? I haven't heard you speaking, the one with your finger on your cheek at the very corner. Can you tell me why it is necessary to record serial numbers? Yes, you please, sir. Yeah, you. If it's available, you know, the lot number or... And the date of disposal. Why is it necessary? Yeah, he's going to try to attempt to answer, then you can add to that.
We record serial numbers for future reference.
No, I said why?
Why?
Yeah.
Okay, to keep track of every goods that is done.
That's a good try. Can somebody else help me?
Yeah, we keep record of serial numbers to be able to track consignments. In case a particular consignment is faulty in town, you track them down.
Okay, thank you. Thank you. That's a good reason. Have you understood him? Okay, because of time, I have to... Depreciation, it also helps you work out the depreciation. When you know the date you bought it, okay, then you know. Why do we budget? I think I've mentioned that for a while already. We all know in this room now why we budget, don't we? Explain to me, my gentleman here, why do we budget? Yes, please. No, him. Thank you.
Yes. We budget. The budget is part of the whole plan, and it helps us. I'm on the spot. Yes, it guides us. It guides us as to where we should put resources and where not to, and also helps us to look back where we put resources and where we did not get the kind of returns that we intended to. Yeah, so the expenditure is monitored in order.
Come for him! All right, the thing is that sometimes, even when the information is sitting right in our faces, we are cracking our heads for the answers. It happens. All right, so the answer is there. So all you could do was to read it out to everybody. So very well done. Thank you. Yes, madam.
I wanted to ask, back to the slide on value.
Yes.
Supposing it's something like an intellectual property, software, an app you come with, how does it fall into your accounting sheet if you value it? Because much of what you listed was like machinery and all this.
So she's talking about intellectual property. How do you record? Because at the end of the day, again, the value of that intellectual property. So for example, I'm speaking right now. I'm using intellectual property. How much am I being paid now for what I'm doing? I'll be able to monitor and record that. And then it also depends on how many call-outs I'm getting, whether I'm bogus or I'm good.
Okay, but you see, you have your assets. It has to balance on your sheet that, let's say, this amount was used to purchase this asset.
Yeah, man hours spent. Yeah, man hours spent. Okay, the man hours. And again, I say that if you give me a hole to dig the ground, you will see my sweat. But if you give me a pen and paper, you may not see my sweat. My heart will beat. Hello? And my nerves will crawl. And that's what, again, I observe that we don't see that very often. We don't appreciate that. Yes, sir?
Yeah, I also wanted to, I think in valuing our businesses, most of the time we actually tend to forget about the aspect of sweat capital.
Right.
Yeah.
Did you hear him? Sweat capital. I've left that for my colleagues to handle. Yeah, did you hear him? Sweat capital. You're going to find out what sweat capital is very soon. So
it's a big drain, especially when most of the time the workload in terms of capital, in terms of whatever that we do, a lot goes into that sweat capital, but we leave it off often. And you go for maybe a presentation or to look for capital or whatever, and someone will ask you what the value of your business, and all you think of is the amount of money you put into equipment or whatever. But the sweat aspect is very important.
It's very important. Thank you, sir. So what we need is receipt book and all that. You're going to get more of these examples later on. And then this is my last slide. Is keep periodic report. So we're not just record keeping, but we are also being able to translate. When my accountant gives me the financial report, I want management account report attached to it, with some advice to me as to how I was turning over this same period, and this time round I am going below. I need some management account. So you yourself as an entrepreneur, if you start periodically, say once a month, understanding why what you are keeping, the records you are keeping, the differences and why they're changing, it helps you when later on you even engage an accountant. Account for waste or major happenings in the business. Consider actions, events, accomplishments, or failures captured in your records for the past period, and think on the possibility for better choices in the next period. Sometimes it depends on when even you are record keeping. You may be dozing off and putting the wrong figures on the paper. It happens. So you can overlook at it again and make sure that you are doing the right thing. Consider actions, events, accomplishments, or failures captured in your records for the past period, and think on the possibility for better choices in the next period. I think I've said that. Consider activities you would like to take on in the next period, then think on the resources you have, then spread the resources across the most impactful of those activities. At this point, ladies and gentlemen, thanks for listening. Can I take a question or two, and then I'll hand you over to my most knowledgeable colleague to take over from me. Yes, sir.
Madam, thanks so very much. I want to know that from what we have learned today, or what I have learned today, can I start my bookkeeping? Thanks a lot for the delivery. But I want to know that with all that I have learned today, can I start my bookkeeping as in-house bookkeeping before I engage the services of an accounting officer or an accountant? Is it possible?
Of course.
With the books available?
I will advise that. Yes, yes, yes. Because even if you engage the accountant and you yourself, I was telling my cleaner that I know every aspect of what she's doing because I've been a cleaner before. Hello? So when you yourself, the entrepreneur, are part of it, and you know what you are doing, when the accountant even falters, at least you understand. As when the tape measure and the accountant say, when they see the tape measure, they know you know what you are doing, so they can't cheat you. Hello?
Hi.
So yes, there's nothing wrong in what you're going to learn, going back to practice it until you got the income or the budget to engage an accountant. All right? So any more questions? Yes. One more. Yeah, we would arrange that for you. Okay. Yes, yes. Pardon?
It wouldn't be a question.
A contribution. Could be a question or contribution.
One gentleman asked why he thinks Ghanaians, we are not good when it comes to record keeping.
Yeah.
And I think, for me personally, my mother started giving me a diary when I was age 6, 7, thereabouts.
Yeah.
And I was always keeping that. And I think it helped me so much. I think a lot of Ghanaian children are not keeping diaries.
That's right. Okay, so yes. So somebody's giving all the examples. Okay, we will talk about this more later after you've exhausted my colleague. So at this point, if it's not a question, I think, yes, please. I think the last one is this one. Then I think I'll be done. But if you have more questions, please don't think that they're not going to be answered. We are here. You can write it on a piece of paper, throw it across, email us, everything. We will help you. Yes, madam.
Request for is that with this kind of program, because there are a lot of startups and even ongoing concerns, I think that the Association of Accountants should be appealed to help small businesses with this kind of discipline, because it's very difficult to stick to it. You be in a business and then, you know, somehow there's always
pressure
something
from
pressure, yes. From all kinds of directions, and the restraints, you can't even restrain yourself, because then if you don't do it, it's like a family commitment or something. If you don't do it, they view you in a different line or different like, so it's very difficult. So
right.
I think people don't consider accountants because they think it's expensive.
Right.
And I think a lot of accountants also take advantage of small businesses and take money from them. So if every 10 or 20 businesses can have an accountant or two who will look at their books and correct any wrongs or right any wrongs and take them from step A to step B, I think that will restore the confidence in them keeping books.
Thank you, madam. I think please clap for her for me. So what she's suggesting is all about coming together. So even if you do it sector by sector, right, industry-wide, we all come together, we can engage the accountant to take us from the level, and we can at least arrange the fees in such a way that we can afford it, so that they can come and visit us periodically as a reminder, as a backstopper, to be able to get used to the habit we want to form in financial record keeping. Thank you very much. And like I said, keep your questions coming. Probably not with me, but I'm here in the room. You can write them to us as well via email. Can we all be upstanding whilst my colleagues getting ready? So I'm taking you through my own style of health and safety. So drop away from your seat a little bit so you don't hurt yourself, all right? Somebody's asking me, this time no mosquitoes. No, no mosquitoes. You just watch what I do and do exactly that, okay? So now with your fingers, because this is going to circulate the blood, you've sat down for a little while. And so put your hand right there and just respond as to what I say. Tete kule. Tete kule. Tete kule. Tete kule. Tete kule. Tete kofisa. Tete kofisa. Tete kofisa. Kofisa langa. Kofisa langa. Kofisa langa. Kofisa langa. Tete tilanga. Tete tilanga. Tete tilanga. Tete tilanga. Kum adene. Kum adene. Thank you so much. Now you can say.
Hello. Are you with me? Good afternoon once again. Yes, my name is Owusu Kodua. As you can see on the board, I work as a consultant with JMK Consulting Limited. So in the next 1 hour or two, I'm going to take you through some of the things that my previous speaker talked about. But I'll move more into details about some of the things. And I expect this session to be more interactive, where I'll be inviting more questions. When I'm going so fast, you can just give me a sign, and I'll come down and explain whatever that you want to understand. Some of these things, I hope the speaker just said about some of these things, so I will skip and go fast. Then where I need to take my time to take it through, I also take my time so that you get better understanding of what we are going to do. We look at Book of Accounts. Basically, it's a record of a company's transactions that affects your assets, liability, revenue, expenditure, or owner's equity. If you look at the spheres of every business, these are the basic things that you see in every business. When you talk about balance sheet, you see the assets there, you see the liabilities there. When you see the equity also there. When you talk about income statement, where you see your actual performance for the year in terms of profitability, you see the expense, and you also see the revenue or the income over there. Now that we are in a more technological age, everybody will bear witness with me that most of the things that we do are electronic. So these things, you can either keep them in electronic form or in a paper form. And depending upon the way you put your system, depending on your business model, all forms are accepted, provided you can ensure that they are properly adhered to your policies. And the reason why we place much emphasis on the Book of Accounts is they form the basis for the preparation of these accounts that I talked about. We try to pick the elements of this accounting one by one. The first one that we are going to look is asset. Basically, when you talk about asset, what comes into your mind? Can someone help me with this? When you talk about asset, yes, boss. What one owns? Yes, another person. Sorry? Things that can easily be transformed into cash. Okay, another a form of asset. Okay. Yes. Yes. Okay. All of them are good. But now, if you look at international financial reporting standards, they put asset in a very simple form. That if a resource controlled by an entity as a result of past events and from which future economic benefits are expected to flow to the entity. What basically it means that if there's a resource, it means you can have something that you think is a resource. But always what you do is to what? Pay something for it. That one has ceased to become a resource or asset. Am I making sense here? You can have a vehicle. Let's say your vehicle is able to bring 10,000 cedis in a month. And in that month, you spend about 15,000 in it. Is that an asset? It's more of a liability because it doesn't bring any economic benefit to you. So physically, everybody will see that when you talk about asset, car is an asset, but that car now has ceased to be an asset and it's tending to be a liability. So when you look at a liability too, it's a present obligation of an entity arising from past events, the settlement of which is expected to result in an outflow from the entity of resources embodying economic benefits, as I just said. Definitely, when you are dealing with liability, you expect that there will be an outflow of economic resources from you. And this economic resources that we are talking about is something that there should be a present obligation. You should have done something that will put you in a situation that indeed you are going to pay for this. If you expect let's say you have a suit or somebody has taken you to court. That one, and you don't know how much is going to be involved. Can we say you have a liability to pay? So there should be a present obligation where something has happened that you know definitely that this one, I'm going to pay for it. So if there's a suit against you in court where you don't know the outcome or you can't tell the outcome of that particular suit, you cannot assume that I'm going to incur this liability because presently you don't have any obligation to pay. But as we go, we have contingencies and provisions that you can make. So we understand all those things in the letters, right? We look at income. Yes, sir, boss.
I have a little challenge here. In our businesses, should we always quantify the profitability of the business based on economic terms, or we can also do that based on the social benefits, which sometimes becomes difficult to quantify?
Okay, what he is talking about, let me take you to some basic accounting concepts, which maybe when I get there, my brother will understand better the question. Let's look at these concepts. Maybe by the time we finish, we're able to understand the question my brother just said. We look at business entity concept. I know when you talk about entity concept, most of us understand the meaning of entity concept. Basically, it says the affairs of the owners of the company is separate from that of the business. What it means that whatever that the owner gives to the company, you have to record it as such, as part of his investment in the company. Whatever that he takes in the form of cash or even stock, in some instances, even you have to use the service of a staff in a day, it's supposed to go against you as drawings. Because if the company should pay for it, then you have to have a way of giving the money back to the company. That's the one concept. And most of the business that we have as young entrepreneurs collapses because of this business entity concept. We are not able to draw the line between our business or our family affairs and that of the business. So we just put everything together and we end up closing or maybe collapsing the company. We look at objectivity concept. This concept is very, very crucial. When you talk about objectivity concept, whatever you put into your books, we want to base on facts. We don't want to assume that this must be this might be this. We want to have facts. So this basically says that in your preparation of any accounts, as an accountant, you have to base on facts but not opinion. What it means that whatever that you get on daily basis should be recorded. And that when the source documents in the form of receipts, invoices, everything is there. Everybody will place reliance on whatever information that you give to the person. We look at materiality. Yes, materiality concept. Can someone help me with the meaning of materiality concept? Yes, sir.
Right.
Okay.
So when you look at the materiality concept, accounting concept,
yes,
I'm just talking about the fixed asset of the particular, what do you call it, the value of the asset owned by that particular business.
Not entirely. Can someone also help us? Yes, of course.
Materiality has to do with, let's say, where there's any transaction.
Okay.
That happens if, like, in disclosing it or failure to disclose it, will have an effect on people who will try to make decisions there. So if, let's say, that information will have an impact on decision making of somebody, then it is material, you need to disclose. But if it will not, then you don't have to, there's no need to, or you may aggregate the those figures.
Yes, thank you very much. Yeah, that's what he has said, but I'll maybe embellish it a bit. What materiality talks about basically is that when you are taking a decision, assuming we pick a company that does in millions of Ghana cedis, and there's ice water of 50 pesos, and this one is omitted from the books, are you going to say this account cannot be relied upon because 50 cedis is missing out of 1 million item? So we look at when there's any omission or a misstatement of that thing from the statement, it will mislead the users of the information. So if it will affect their decision when it is understated or omitted or misstated and to affect decision, then we say that particular information is a material. But if it cannot, then we can say this one is not material. But as my good brother just said, we also try to aggregate them to see that when all of them are combined together, still it can make a substantial amount. This ice water, as I said, if you buy ice water 50% worth in a month, and we say, oh, every day is not material, but when you add them together in a month, it might be a substantial amount, so that one becomes a material. So that's what we mean by materiality concept. And it's so important that when you are maybe setting up every business, you need to know what is material level for you. Because a small company, even a small company, when you buy this particular laptop, it will be so material that when it's omitted, it can mislead the whole financial statement. Because if you have a balance sheet size of, let's say, 10,000 and you omit a laptop of, let's say, 2,000, definitely the figure will be misleading. But if a company in millions of dollars omits 2,000 laptop, it cannot entirely be described as a misleading financial statement. Then we look at double entry concept. That one I hope everyone has actually, most of us who have business background. Yes, and some of us. Can someone also help me with that one? Can someone help me with? Okay, sir.
What it seeks to explain is every transaction that comes into your business has a double size to record it. That is, if you buy a pen or if you buy a stationery, that record of buying a pen has a double effect on your account.
Okay. Yeah. What he's trying to say is that basically, in accounting, everything that we do, we say it should be recorded twice. So we call it dual concept. So whilst one will maybe give, another person is also receiving. So that one will ensure. I remember when we were at the university, someone will say, oh, my balance sheet did not balance. Because if you pass one and don't pass the other, it can never balance. So that is what you mean by double entry. You look at accrual or matching. That one, can someone also help me with accrual? Yes, I was. Okay.
Maybe over a period of time, then you should account for it like over time. So spread it over a number of months.
You have idea, okay, sir.
It's an accounting concept or postulate that states that all incomes, whether when earned, whether received or not, should be matched against all expenses that are incurred, whether paid or not.
Yes, sir.
Like you were saying, what this one means is that income or revenue is earned. You don't necessarily when it is paid for, but when the transaction is effected. And then also, an expense is incurred, you know when it is paid for, but then when the transaction takes place. That's what.
So, as he said, the matching or accrual concept basically means that not necessarily do you have to pay expense before you can take charge of it. And more so, when you have an expense, assuming you incur an expense, but the income that you are going to generate from that particular expense will come in the future. There's no need for you to start expensing it today because the income for which call for the maybe expense of that particular expenditure will come later. So you can wait and match. That's why it's matching. So you match all expenses against their revenues. Yes, madam. Sorry?
The explanation that you just gave, does it have anything to do with income smoothing?
No. If you apply it well, it doesn't have any issue with income smoothing.